This video covers trend lines, which are the diagonal lines that are typically anchored to at least two price points of a chart, normally the highest or the lowest price points of a given bar, and when violated indicate a change in trend direction. Now, this example here, the semiconductor index, shows that trend line lengths they matter because they indicate just how long and powerful a trend is. There are three lines drawn here, all of them bullish. This shows the very long-term trend since the bottom of the financial crisis. This shows more of an intermediate term trend. And this right here, which we have to zoom in to see more plainly, indicates the shortest term trend. And should this, for example, should this uptrend be violated, should this trend line be broken, that really opens up this area, everything between these two trend lines, as an area of weakness. And it should find support here. Should it fail that level, then one would watch for the principal longest term trend line to provide support. One by one they may be broken, but until they are, they provide support. Or if they were descending and the prices were beneath, they'd be serving the role of resistance. Here is XMI. And trend lines can be above or below prices. If they're below, which is very common, that's support. And if they're above, they indicate areas of resistance. Now, normally you do not want prices going above and below trend lines. However, if there are important trend lines to watch and you get a violation of them, they still have merit because this overshoot here was undone and now we're beneath it again. If the price goes above and below repeatedly, then the trend line really loses its efficacy, its value, its meaning, and would just be deleted ultimately. Here's AABA, another good example of a very long-term uptrend, and then a shorter term, in this instance, medium uptrend. AIZ, now this is a good example of role reversal. Here it had provided support for many, many years. However, once it broke the trend line, it changed roles to one of resistance instead of support. So as the stock was recovering, it actually tagged just the underbelly of the now broken trend line, showing that was the resistance point, and was repelled from there. One important thing to keep in mind, however, is that just because a trend line, an uptrend, is broken doesn't mean the stock has peaked. A price can stay below a trend line forever and keep going higher and higher in price. So in this case, the stock failed at around 95 or so, but it's a good $20, $25 higher than that as of this recording, even though the trend line, the uptrend, is broken. Here's ATI, a combination of a horizontal and a descending trend line, making sort of a right triangle. Here's Sigma, symbol CI, and these trend lines help us spot a wedge. So here was the resistance, here's the support, and as we zoom in, this fails on a price gap, so now this trend line is no longer supports resistance, and up and up and up it climbs. 3 different times it tries to get to the other side of the line but fails each time, and then succumbs once more to its new trend. Here's DRI. This uptrend is quite plainly in place and shows the utility of this, because so long as the price complies with that support and stays above it, it's in an uptrend. HSIC, a good example of a broken uptrend whose price recovered and almost perfectly touched the underside of it. So that showed a very nice shorting opportunity when it tagged the underbelly. HYG, here's a whole series of trend lines. Here we used to be long-term support, now it's resistance. Here is somewhat shorter term resistance, and here's a line between the two of them. And you can see that it was within the confines of these two trend lines, then shifted to a new range, and now is in this range here. As we zoom in even tighter, we can see that now that this long-term trend line has been broken, it has repeatedly tried to get to the other side, but has been rejected each and every time, even so much so that this lowest trend line of all has also been violated. Here's IYT, a couple of different lines here, showing critical areas of support and resistance. As of this recording, this supporting trend line has been broken as well. JP Morgan, long-term and a shorter term ascending trend line. SLV. Now here's an example of a descending trend line. So silver had been in a bear market for years and years and years. And here, as we zoom in, right along here, in fact, this particular day in April 2016 was when it just peaked above that trend line, which had been in place for a half a decade. And once it broke above that, it had escaped the grind of that downtrend, although it went into a more modest downtrend here with a much more shallow descending trend line. Here's WDC, another good example of a former supporting trend line which is now resistance. Here's the financials, XLF, whose trend lines are helpful in spotting this particular analog. XLI, the industrials. This shows how this red line had been support up until here, the financial crisis, and it changed roles. What had been support was now resistance, as you can see here, again and again, hitting this level. And then a new supporting line was here, which, as of this recording, is certainly broken. So now beneath all of that, and the market is stalled out, moving more horizontally. And last example, XLY, the consumer discretionary select. This trend line was anchored to the bottom of the financial crisis, and since that time has made two strong attempts, but in each time has been perfectly repelled by the new role of resistance of that trend line.